June quarter, meaning the Q1 FY27 earnings season for the IT sector is set to begin, but the street expectations looks fairly muted. Now, the brokerages have cut the estimate across the board, primarily due to the delay in the deal closure and the slower revenue conversions. While companies continue to win the larger deals, clients are taking longer to finalize the spending decisions amid the geopolitical uncertainty and the rapid evolution of AI. Even the signed deals are taking longer to ramp up. Adding to the caution, Accenture's latest earnings suggest that the weakness isn't restricted to one quarter and the softness appears to be extending into the second quarter as well, raising concerns over the near-term demand environment for the same. In fact, analysts now believe that FY27 could turn out to be the fourth consecutive year of subdued growth for the Indian IT sector. Now, Citi expects the top 5 IT companies to report the constant currency organic revenue growth in the range of -1.5 to +1% for the June quarter. Now, looking at the company guidance, Infosys has maintained its FY27 revenue growth guidance of 1.5 to 3.5% with an operating margin guidance of 20 to 22%, while indicating that the first half of the year should be stronger than the second. Now, moving on, HCL Tech continues to guide for 1 to 4% of the constant currency revenue growth for FY27 and an EBIT margin for coming in the range of 17.5 to 18.5%. On the other hand, Wipro has guided for -2 to flat sequential constant currency for the June quarter. Tech Mahindra has reiterated its target of achieving a 15% EBIT margin in FY27 but has refrained from issuing a formal revenue growth guidance, citing macro uncertainty and AI-led pricing pressures. Another key factor this quarter will be the impact of the annual wage hike, which could weigh on margins before offshore leverage and AI-led productivity benefits begin to offset the pressure. So what should the investors now track? Beyond quarterly numbers, management commentary will be critical, particularly on the demand trends, deal wins and TCV, the pace of AI adoption, competitive intensity and whether the rupee depreciation are providing any meaningful support to the margins. And those are the qualitative updates that are likely to drive the stock performance this quarter.